Hey guys, how are you doing? Super excited to have you all here. Please let me know before we will start that you can see and hear. And while you're doing that, type in 1 if you already been trading with us, the 5ers, or 2 if it's the first time, just so I can a little bit understand who's with me on the line. Good time ahead of us. Waiting for your reply on the chat and we can continue. Okay, wonderful. Thanks so much, guys. So let's start. Not wasting any time. We are talking about indices today. You ask for it, and we obviously listening and give you what you want as our traders. So welcome to the world of indices. So as you, some of you already heard, you can start trading indices with us, and today we are going to talk about that. I'm going to show you the indices that you can trade, and the type of the program that you can trade with. And obviously we will talk about trading indices. What does it really mean? How can you apply your trading strategies to trade indices, and lots of good stuff. So stick around. If you have any questions, feel free to type them in the chat box, and we also got the guys from customer support that watching the chat, so in case I missed one of your questions, they will answer it, but I will try to keep up with everything. So let's go. Just a tiny bit about myself, in case we didn't meet yet. My name is Michel Katz. I've been trading stocks and futures. That means indices and commodities for the last 15 years. Most of my trading is day trading. I did some other stuff in Israel, building up like prop firms and stuff like that as well. And obviously trading on my own money and others. So what we are going to cover today. The first thing that we're going to talk about is indices. We're going to do some quick introduction for those of you who are not familiar with that. We're going to see what can you trade with us today on which program. We're going to talk about how to calculate the risk, just understanding the difference between what you know already from Forex to indices. See some trades that I made the last few days and talk about them as well, and how you can apply them as well, and see the dashboard, understanding a little bit the numbers behind it. And at the end we will cover the trading tools that you can use in order to trade properly those indices. So let's jump right to it. Okay, so what did we add basically? So the first thing is the S&P 500. S&P 500 is the largest index in the stock market, the stock market. The US stock market is the king of all eyes going to this index, the S&P 500, the Standard and Poor's, that's the initial. And basically the whole world just watching it in order to know what what the markets will do. Even Forex traders, I guess, that are here today are also watching, at least watching, if not trading, the S&P, because that's the first thing that every investor, every institutional trader, hedge fund, banks, and all of that are watching to know exactly what they want to do with their money. So this well-known index is basically complied with the largest US companies, the 500. So everything that, all the stocks that you probably heard and familiar with, like Google and Amazon and Tesla and Apple and all of those. We added also the Nasdaq 100, is the technology index. So all the good companies, I don't know if good, but all the big tech companies that you're again all familiar with, and PayPal and Netflix and Apple obviously, and all of those stocks are in that index. US 30, that's the Dow Jones, the the oldest of all, with the 30 biggest companies in the US. DAX 30, that's the king of Europe. When you want to trade European stocks, you always go to the DAX. You know that it's, although it's a German index, but it's like the king of Europe, because the German is the largest economy in Europe. So definitely most institutional traders go there and watching what the DAX is doing. The UK 100, so obviously the strongest 100 companies in the UK, and the Japanese 225, the Nikkei, also a great index to work with and trade on. So those are the indices we add. We are super excited. It took us a little bit time to add them, but definitely now that we got them and you can trade them, go ahead and do so, because trading indices is amazing. Obviously, you can trade it 33 hours a day, similar to Forex. You have lots of volatility. Trend following strategy will work great on indices. Counter trend will work as well. I will show you some of my stuff that some of the stuff that I did this past few days. So yeah, the UK 100 is the FTSE. Yeah. So definitely a lot of opportunities there, and basically this is what we're looking for when we are trading, right? Because right now at the moment you have those 28 pairs that you can trade, Forex pairs, but now that you have those indices, then you just add into your arsenal more options to trade, right? So more opportunities means that you got more tools. You can apply your strategy on those indexes and basically find the right trades to take on any given day. Because sometimes you can watch a pair but you won't see anything on the same day. But if you have more assets to trade, especially those assets when they're moving this time of the year, definitely moving super as volatile as it gets, pushing up, dropping down, a lot of good stuff that you can do with the indices, and I will show you in a minute. Okay, so we took our instant funding program and we added those indices to that program, so you can start right now. In case you're obviously trading our Freestyle or the bootcamp, you can definitely join the instant funding in order to trade those indices. And this is one of our favorite program, because you're going live on the same minute you're registered. So it's not a demo evaluation, you're just going in. Obviously you have an evaluation, but it's on real money, so definitely more interesting. So in case you didn't try it yet, or you did and you want to go back in order to trade indices, do that. Just go to the website, it's on there, right on the home page. Instant funding, you can choose between a low risk or aggressive, depends on your personality, depends on how you trade, and basically get into that. So before we will start with how to trade and some tips and tricks that you can apply, let's talk about calculating risk, because obviously that's the most important element when it comes to trading. If you know how to calculate the risk on Forex, that's one thing. On stocks, that another thing, and on indices, it's a different tiny bit change. So it's important for us to cover that. And let's take for example the Nasdaq 100, and you can see the specification on our website. I will put the link in a second. Let me put the link before I'll forget, just so you can see everything and also watch it with me. So I'm putting the link for the specifications, and right now I'm talking about the NASDAQ just for an example. The contract size for each index that we added is 10. Okay, the minimum lot is 001. That's you can see it on all indexes. Every index that we added, you can buy a minimum lot of 001 and the contract size will be 10. The incremental step is a bit different, and therefore you should go to the link that I just sent on the chat so you can see the difference between them. Most of them are 01, but the DAX is 05. So just for you to know. Margin rate, obviously you have it also, the commission, the swap, and over the weekend swap we actually not allowed, at least for the beginning right now, you can't trade on the weekend, so you gotta keep it for the full week if you want to trade it, and so make sure you cover your trade at the end of the week. So go ahead and join the link that I sent, just so you will get familiar with the specification. But let's talk about the risk calculation. So for example, if I'm taking the NASDAQ, that's a chart of the NASDAQ 100, and I want to enter at 12,602 and my stop loss is at 12,592, that means that my stop loss is 10 points. First of all, when it comes to trading indices, we are talking about points and not pips, for example, just a matter of term, you know. So the stop loss is 10 points. Each point cost or risk of $10. So basically, if I'm taking one lot, I'm risking $100. If I'm taking a 0.1 is $10, and if it's a 001, it's $1 risk. So this is how you calculate, super simple as you can see, this is how you calculate the risk that you can take per trade. The NASDAQ, for example, can easily go 200 points a day, 300 points a day, definitely when we're talking about this time of the year, because you see the markets, the Forex market also super volatile, the gold, silver, stocks, all of those assets are flying high or dropping majorly down. You see it on the news, probably heard that Facebook dropped down like 25%, and Netflix, and it's crazy time to trade, and it's this is what we looking for, right? Because crazy time, a volatile time in the market, basically it means that we get more opportunities to trade, more entries and exiting places. So more support levels, more resistance level, more trend following, more counter trend, all of those. So this is simple as that. You just know what your entry price, your stop loss price. From that point, you just need to understand how much cost a point, what will be the risk for a point, and then if I'm taking one lot, it will be $100 and etc. In time, as soon as you get familiar with the chart of each index, you can understand how volatile it is, and the ATR, the average true range of the asset. So for example, like I've mentioned, the NASDAQ could go easily 200 points a day. The S&P will go 50 or 80 points. So just looking at the chart, you will figure it out pretty easily. I'm trying to look at the chat box just to see if there's any questions. Okay, but I can say that the guys on the support doing a great job. So in case I will watch the chat at the end of the presentation, in case anyone will have other questions, then I'll answer them. So this is how you calculate the risk. Again, just go to the website, the chat, the link that I sent, and just watch the specification for each index. So how do I trade indices? So first of all, you need to decide if you want to, day trading, 1 minute chart, hardcore trading, or you just want to, take it as a 1H or from 4H and be more relaxed and all of that. When I'm trading the indexes, like S&P and the Nasdaq, those are the main indexes that I'm trading. When I'm doing that, it's usually on a 1H or 4H. I'll show you in a minute a trade I made on a 4H and the reason I took it. The last few days I traded a little bit more heavily and went down to the 1 minute chart. On stocks I usually trade 1 minute, but on indices I usually stay a little bit higher than that. But just for the last few days I entered just a little bit deeper, just to have more a feeling to that, or give you the opportunity to show you the opportunities out there. So first, when you're talking about indices, you want to talk about sentiment, right? What is the overall conditions in the market? Is it positive or negative? Especially, obviously, maybe not for a 1 minute chart, but if you're trading 1H or 4H, definitely look for the sentiment. In general, we said that the S&P 500 is the 500 largest companies in the US. So we are talking about understanding not just the pairs like euro, pound, but understanding the companies, understanding just a little bit about the economy, what will move, what the investors in the US, for example, thinking about the economy, the US economy, and basically you want to stick to that when you're talking about the large time frame. The other thing that you want to watch for is who is the leader right now, because there will be times where the S&P will be stronger and lead the way, and Dow Jones and Nasdaq will follow along, and obviously the DAX and the Nikkei will follow in the UK, the FTSE. But there will be times like the last 2 years that the Nasdaq was the strongest, and for that reason those all the technology companies just soared and went up like 300% or even more than that. And then the rest of the S&P 500 and the Dow Jones and the other European indices followed along the Nasdaq. So in time, you want to play with it. Just put the charts right next to each other and see who is stronger. Most of the charts, like the Nasdaq and the S&P, even the Dow Jones, are looking pretty much the same. And each one have his own tricks, but pretty much the same. So just make sure you're following the three of them and see who is leading right now at that time that you want to trade. I will show you in a minute one of the trades that I took the other day, and when I looked at it, the S&P was great for the long side, for the upside, and the Nasdaq was also great, but the Nasdaq was a bit aggressive to the upside. You can literally see it on the chart when you're looking at both candles. You see that it's more aggressive. They're pushing it harder. The candle is more wider. The momentum, the pace of the buying is more stronger on the Nasdaq. So this is why I went to the Nasdaq instead of taking the S&P, for example. One other thing, when you see that the Nasdaq is blowing up and the S&P is a little bit lagging behind, you can, if you miss that trade on the Nasdaq, you can easily go to the Dow Jones or the S&P and follow along, because they are like 95% of the time will be correlated. So you can play with the correlation in order to understand which one is better, and then jump on the weaker one just to keeping up the pace with the leader. So this is a great opportunity to play with correlation. And when the market, the US market is been trading higher, and you probably will see the next day, you will probably see the European market catching up as well. So those kind of things will be great. The last thing that you need is trading tools. So, from different time frames, indicators, price actions, supply and demand, find which one is obviously will work for you, and from that point just repeat it over and over again. I guess most of you are already been trading, so you got your style or you got your strategies, so you can easily take those and apply them to the indices. Maybe have some tiny changes along the way as soon as you understand and a little bit more, and as soon as you get more data statistic wise, and a little bit change it. But at the end, everything, market is a market, so Forex market will work pretty much the same when it comes to strategies and supply and demand and price action and all of that. So just make sure you got your set of rules and try applying them on the indices that I just mentioned. Tiny bit, just. Okay, so this is one of the trades that I made the other day. It was Thursday, if I'm not mistaken. Yeah, Thursday, 26th of May, where I actually bought the future contract, but it's pretty much the same of what you got in the MT5. And what I did is just bought it here. You can see the triangle, the blue triangle. And after a day and a half, 2 days and a half, I covered it almost at the top of the trend. Made some nice profit here. But the main reason, and this is why I wanted to show you that, is understanding the movement of the price here. So this is the Nasdaq 100. You can see that the chart, it was pretty much a downtrend. This is also a 4-hour chart, so a downtrend, trading in a channel, perfectly held the resistance and the support level. And as soon as it showed me the opportunity that it's going to break through that channel, I entered, and this is the chart, the previous chart that you saw, and exit pretty much at the top of it. Now again, this is a 2.5 days position on the Nasdaq. Now, if we are looking back and taking the all into consideration, the sentiment and the leader of the movement, so all of that, you can definitely understand that after a major downtrend, you should see a bounce up. You probably watching the news and know that the market is pretty much drop majorly the last few months, so it makes sense to see a bounce up. We reached a major support level. This red line is if you go back in the chart, you will see a major support level that we reached at. And we also had nice deviation in the MACD, one of the indicators that I usually work with, and we will cover a little bit more of what you see here as volume in few minutes. So as soon as I saw that it's going to break through the level and testing it again, the sentiment became a little bit more positive the last few days. The supply area was a great demand area was a great place as well, and this is why I took that trade. And as you can see, it went from something, let's see again, 11,896 all the way to 12,799, so almost 1,000 points in 2.5 days. Super volatile, and obviously I was just with one contract, so you can easily take more. There was a great opportunity to add here, with this flag, the bull flag, the pattern that was here, but I missed that. I just wasn't on the chart that day. So how does it look like when it comes to intraday, like hardcore day trading? And this is an account that I took just to test it and basically trade on it the last 2 days, just to show you guys the opportunity and the volatility and that you can use that to your advantage when it comes to trading indices. This is super, you can catch a great move either on a 1H, 4H, but also on a daily, on a intraday, on 1 minute chart as well. So I started with 10,000. I ended up the last few days with 16, almost 17. Pretty much nice result, and also the what it's called, the success rate and the profit factor and risk reward ratio. I just traded the S&P and the DAX, a little bit of the USD JPY, but it was just before that, so ignore that trade on the USD JPY. Most of it, as you can see, the DAX, the German index, and the S&P 500. Great trading there. So this is a 1 minute chart for the S&P, and what I'm looking for is basically the same concept of supply and demand, the same concept of resistance and support in the price action with it, but on a very tiny time frame. So a 1 minute, super volatile. You can see nice candles of like 50, 60 even points. Sorry, not 60, 6 or 5, 6, 10 points in one candle. That it could be amazing trade. I took some volume here, so it wasn't that was heavy. It wasn't that like tiny pieces of the trade. But as soon as I got to that extra level here and the trend was a bit extended, there was a major resistance level in that area. As you can see, the head and shoulder pattern. So I entered here, added more here, and then covered as soon as we reached the minor support level right here. So what I really like about trading S&P or the Nasdaq or the DAX is, since there are pushing even on a 1 minute chart, they can easily push, like as you can see, from 4135 all the way to 4166, like 30 points in an hour, or even less than that, like 40 minutes. You have more opportunities, you have more places where you can add, and not just get in one entry and that's it. You can scale in pretty easily, and I'll show you in a second. For example, here in the S&P as well, this is the first trade, by the way. I got out, and then look at this, I got out here, took a great trade, but it went down much more than what I took. So it could have been much better than that. But as soon as it hit another support level and bounced up of it and made a nice trend to the downside, I understood we should see a bounce up again. So I started to add here, 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 and here, adding more as we're going just along that support level. And from that point, as soon as it started to pop up to my favor, I took my partials. So you don't we actually did a nice podcast on that. If you missed that, make sure you watch it. It's called Trade Management. Saul and I spoke about scaling in and scaling out. So maybe you should watch that. It could help, definitely could help on the scale in, scale out matter. On the DAX, I traded I think yesterday. Yeah, it was yesterday. That was my definitely my biggest win. It was very rough to play with it, but I'll give you some tips that you can work with in order to understand the DAX just a little bit more. As you can see, I bought the whole area here, again major support level, taking stop losses out, the same thing as in Forex, manipulating the price, all of that, taking some out here, then adding more through the area right here, so in the money basically. I actually missed that point. That was a great point to add more, but I missed that. As soon as it bounced up, I started to cover my long. I missed that exit. That was a nice exit, but it's super fast. And as soon as it bounced up again, I covered that trades as well. So when you play with it, even on a 1 minute chart, look how many opportunities to trade you can find in just like, it's from 8:50 to 10 o'clock, so like an hour and so, and you can find a lot of opportunities and a lot of movement. So those of you who like the movement, those of you who like to be active, scaling in, scaling out, really feeling the market and really trading, this is definitely for you. The indices like the DAX 30 and the Nasdaq and the S&P, definitely check them out. Okay, so what do you need to know really in order to trade the indices? A few simple things, like there's only 2 points after the the decimal points, so it's not going to be 1.074, 10 and so on. It just usually it will be like 4,000 or 12,000 or whatever, but 0.10, 0.25 and so on. Like I said earlier, we call it points and not pips. The incremental step is between 0.10 to 50, so you will see the price bouncing from 12,000 to 12,000.10 to 12,000.20 and so on and so on. That's the minimum incremental. The contract size, like I mentioned, is 10 for all of those indices that we added. And let's focus on those last two that I added here, the volume and the stocks. So the volume is something that usually not familiar with Forex traders, is the number of contracts, or if it's stocks, the number of shares that switched hands between buyers and sellers, or sellers and buyers at any given moment. So if I'm looking at a 1 minute chart, this minute, specifically this minute, I can see the number of contracts that switched hands between the buyers and the sellers. And this will give us a lot of information that we can process and use in order to trade better. I will show you in a minute and give you some rules for that. And the other stuff is stocks. Basically the S&P is 500 stocks, the Nasdaq 100 stocks, DAX 30 stocks, 30 largest stocks in the German, the FTSE is 100 of the UK. So get to know them just a little bit more. You're obviously familiar with a lot of them because we're buying Nike and iPhone and Tesla car or whatever. So we're already familiar with the brands, but it's good to know them, just a little bit about the company, their social media, how they work, who operate them. It will give you just a little bit more information and maybe a bit more edge when it comes to trading the S&P, if you know most of the stocks there and understand how they operate. So let's talk about volume, because this is definitely a major difference between what we have on Forex and what we have when we trade in indices. So first of all, like I mentioned, volume is the number of contracts in that matter switch hand between the buyers and the seller, from buyers to sellers. Doesn't matter if I'm looking on a 1H or 4H or 1 minute. And the reason I need to know what a volume is especially in indices and stocks, the volume is definitely a key factor when it comes to trading, because a volume can show you how the buyers are more aggressive than the sellers, or the opposite, can show you who is the weaker side, and can confirm a trend, or basically signals for a counter trend. Most of the trades that I just show you the last few days also based on the volume that showed me that the price should bounce up from the support level, for example. And this is one more indicator, one more parameters that I can use in order to confirm that the trade is probably the right one to take. So how do I really read those levels or this volume basically? So first of all, when it comes to a trend, if I'm looking at a trend, I want to see that the uptrend is increasing with volume. It doesn't have to be like bouncing up every volume bar just increasing, but the whole area of the upper wave should be with great volume. And when it comes to still in a trend, when we're looking at the pullbacks, the opposite direction, we just want to see a weakness in the volume. So a weaker volume will show us basically that there are not a lot of sellers that are getting momentum and want to get rid of the index that they trade in, but they actually want to keep it, but just taking some partials or whatever. So strong move to the upside, you want to see volume coming in. The pullbacks, you want to see decrease in the volume. Or the third option is when reaching the end of a trend. This is definitely my favorite strategy. Like 90% of what I do will be counter trend. Counter trend means that if the price is rising up strongly, it will reach our resistance level and then I'll take short. Or if the price will drop down, I will look for a major support level and bounce off of it and basically buying the support level to take it to the upside, like you just like I just showed you in the trades that I made. So the volume when increasing at the bottom, let's say if it's dropping down, so at the bottom when it's increasing, that I can understand that the price is being manipulated right now, and basically they taking stop losses out just to buy more shares or buy more contracts and then pushing the price higher. So think of it like a false break, right? So when the price is reaching a certain level, pushing and break through that level, but then it's basically a false break when it's dropping down again. So just taking liquidity, hunting stops, and then moving the price to the other side. So this is definitely my favorite strategy. And this is what we'll look for when it comes to the volume. So first of all, when you go into the MetaTrader platform, you can go to the indicators and there just look for the volume. Okay, simply as that. Right now, if you're using anything, you will probably have a tick volume, T-I-C-K, tick volume. But if you will go in the MetaTrader, go to indicators, look for volume, and this should pop up to your chart. So this is a Nasdaq on a 1 minute chart. Increased volume at the bottom will show us a potential reverse basically of the trend. So this is what we see. Look at the price moving sideways and then dropping down. It's actually came from way up, way above, drop down, consolidate, drop down again, and look at the volume when we're reaching that support level and we're reaching basically the bottom. So as soon as we reach that, the volume is increasing, showing us basically that the buyers are getting stronger, while the short sellers that thought that the price will continue lower basically got trapped in the manipulation and then it shoot up. So let's see another example for that. Try to see it. Actually, tell me what do you see besides what I wrote here. So look at the volume. I just pointed the arrow to the chart, but I want you guys to look at the volume. Okay, look at those volume bars that are popping up every time we have something major going on. So the first time, let me know guys what you see on the volume. what do you understand from that before I'll continue? Okay, and this is the Nasdaq 100 on a 1 minute chart as well. And this is why I like to trade. And when I trade stocks, I usually trade 1 minute. It's look pretty much the same. So yeah, exactly, Paul. So the volume spikes as soon as we get into a major point, and as soon as the price reached was extended, basically moved up very strongly. Then look at the volume. The volume increased at the top of the trend, at the top of the wave. So this should indicate that is similar to a false break, just adding people, more and more traders are buying this breakthrough, this breakout, right? And when they are buying, someone from the other side is the seller, right? So they selling the manipulating the price, institutional trader just dumping the price on them and basically creating short selling, great short selling positions just to take the price to the downside. Now, in this case, you can see a major volume coming in, but this is not the end of the trend, right? Because we really didn't have a trend yet. We didn't have a trend yet. So in this case, this bar and this volume should indicate that the price will continue to the downside. Look at the difference between those two. One is moving up, extending price to the upside, then the volume coming in at the end. The other one, like this one, is basically getting out of this channel or this sideways consolidation. So this is a huge difference that you must remember when you're trading it. And look what happened here. Increased in the volume after a downtrend, after a nice drop the last few bars. So definitely you can expect a bounce up in this case. Also a nice support level from the past. Moving the price up, breaking through, and again, great volume coming in, showing you that a lot of people are buying right now and looking to buy the Nasdaq. And as soon as a lot of people want to buy the Nasdaq, then we can drop the price on them. That's what the smart money manipulation thinking, and the price continued to fall down again. So if you will start using the volume, and I can definitely recommend doing that, using the volume will give you another edge that you can apply to your trading, understanding when the price should reverse or continue with the trend. Two very important elements there. And lastly, like I've mentioned, if we're talking about stocks, and we're basically, when you trade in the S&P, you trade in the 500 stocks or the Nasdaq 100 stocks, definitely go ahead and understand it just a little bit more. Watch the charts, start looking at the charts of PayPal or Netflix, watch how they move, look in social media, read a little bit about the company, gather as much information as you can, just to understand how price should move and how stocks can be changing the way the S&P 500 will move when we're looking at maybe a little bit a bigger time frame, like a 1 minute and so on, and 1H or 4H and so on. So if you want to find this information, you can find it. Usually what I'm using is Benzinga or Seeking Alpha. Finviz is a great place to scan for stocks and stuff like that. So you can look at them, a heat map when you see all the market in one place, or you can read your information, get your information on Market Watch, is also a great website to work with, just so you can get a little bit more understanding of the price action you should see when you're talking about stocks, because it's basically trading stocks just with one index. So yeah, that's about it, guys. If you have any questions, feel free to drop them in the chat right now. Besides that, like I've mentioned, go ahead and join in the funding, the instant funding program. Definitely worth the try. The Indices is a great opportunity, especially in this time of the year. So make sure you register and start your evaluation, get funded. You actually, on instant funding, you're trading real money right at the opening. So you can definitely do that. Let me put some links here. So yeah, so you can see what we talked about. That's the instant funding. That's the specification. Yeah. Thanks, support. And if you have any questions here, feel free to write them down. If I missed anything, you can just type them again. Maximilian, you're asking about the source of the volume. It's basically our supplier, the liquidity provider, yeah, that we're working with. Yeah, no problem, Pierre. Definitely go ahead, do that. Well, Pierre, we just started, so you know, we're testing it. It's, you know, we're first thinking of risk management above all. Still financial company, and we're trading, so we gotta understand the risk that we're taking here. So as soon as we'll gather everything, then we can probably add it to the other programs and all of that. So at the beginning, right now, it's on the instant funding. All right, guys. So I appreciate the time, and I would love to see you again, especially in this indices, so we can maybe trade live together as well. And I'll see you then. Take care. Good luck. Bye bye.